Hi, I'm Charlie Jamieson, Chief Investment Officer at Jamieson Coote Bonds, and this is our March review of markets and performance. March was a very strong month for fixed income performance, with both our domestic government bond strategy and our global government bond strategy producing very solid numbers. For the quarter, the domestic strategy has returned more than 3.8%, whilst the global strategies, which were launched into the retail markets at the late part of February, have returned more than 2.6% in a little over a month. It's a wonderful strategy, particularly at this late cycle environment. When we go back and review the economic data over the first part of the quarter, the economic data pulse has been tremendously weak globally, with purchasing managers' surveys now showing contractionary global manufacturing outputs. This could have been weather affected, it could have been government shutdown affected in the United States. It probably had some impact on that. But clearly the economic data pulse is very weak, as it was at the end of last year, and that's continued on through 2019, and we've seen some tremendously weak data again in March. In response to that, we've had a tremendous U-turn from the Federal Reserve, who in their March meeting in the United States were tremendously concerned about the outlook for the economy, what we'd call a very dovish outlook, and that's a big turn for them, and we wonder why they are as concerned as they are. We really believe it is this continued rise in consumer loan delinquency, which is a very slow moving theme, but something which is starting has got off the starting blocks. It caused a lot of anxiety at the end of last year and really forced the Fed's hand to turn around and become much more supportive of markets in conjunction with all of their central bank, global central bank counterparts, in the Bank of Japan, the ECB and the like, all showing a fairly sombre outlook for economies throughout the next part of 2019. In Australia, the RBA are now needing to acknowledge that they are a long way from their growth and inflation upgrades, which they made at the end of last year. The incoming data again has been fairly weak, whilst the housing market continues to decay, albeit at an orderly rate, but it's a continuous decay which we're now going through. And the RBA have acknowledged that change, and they've certainly moved their rhetoric away from the next move in interest rates is up. And financial markets have been well in front of this and have been pricing in the fact that the RBA are very likely to have to cut interest rates in the latter part of 2019. And that's certainly our internal assessment here, that we will require more policy stimulation in order to try and slow down this issue with the housing market, and we would expect that policy accommodation to come after the federal election in May. The irony of the stronger data in Australia, and so we've certainly had some patches of better data, the employment picture has been holding up, but the irony of this is it stops the RBA from acting earlier, and thereby it allows the economy to continue to go through this negative spiral of property market decline, and ultimately that can be something that we really need to consider. Because the deeper that decline becomes, the more forced sellers are entered into the market and the more damage that can be done on a longer term basis. We liken that to a patient requiring immediate medical support. The longer they wait, the less their chances are of having a good outcome. We've certainly written about that in our written monthly this month, saying that the irony of data that holds up and holds the RBA back from addressing these issues can actually make the outcomes worse in the longer term. Central banking is very much about the policy of least regret, and the least regret at this point would be to provide that accommodation to slow that deterioration down, if not stop it altogether. And that's why we really believe the RBA will be forced into the market well before their public speeches and policies might suggest. Just wanted to leave you with a thought around the cradle of Western democracy and capitalism as we know it. Both in the United States and the UK, we have a very powerful lurch towards the left in politics. Both Bernie Sanders in the United States and Jeremy Corbyn in the United Kingdom are staunch democratic socialists. Now this is an important development, particularly at a time where a new theory is getting a lot of airtime called modern monetary theory. The theory suggests that we can continue to print large government deficits, essentially create money out of thin air and transfer that straight into the hands of those most in need to drive economic outcomes. Now, as a global citizen, I'm very much in favour of helping those in need rather than directing this type of stimulus towards those that don't require any additional help, which is certainly what quantitative easing has provided to markets up until this point. The problem, of course, is it's created tremendous amounts of social friction. And this new policy is something that is very interesting and is gaining a lot of commentary all around the world. Not so much here yet, but it'll be a big part of the debates, particularly as we move into things like the 2020 US presidential election and the like. As a finance manager, I cannot condone the unlimited printing of deficits. We talk a lot about being responsible investors and making sure that you can pay your bills at the end of the day, and governments cannot continue to operate in this way, despite the fact that some governments have been getting away with it for a very long time. And the obvious one here is Japan, which essentially lives in a perpetual mode, but that's a little different because of its deflation caused by demographics. This is a really interesting thing to talk about. I think we're going to write about it a lot in coming months. You'll see us talk about this a lot, but it's just something to orientate yourselves with, particularly around the new Green Deal from the US Democrats. It makes for very interesting dinner party conversation or Sunday lunch conversation, and it could certainly be coming to markets near you very soon. So we think it's something that's worth orientating yourselves with now. Thank you.